Moving on, let's get you an important market voice. We had Navneet, the Munot, on the channel earlier on from SBI Mutual Fund. He fears some moderation in the US economic growth is around the corner, since the growth phase has been on for a very long time now, without a meaningful pause, of course, and believes investors may shift from developed markets to emerging markets very soon. Listen in why.
For the global investors, the worries have been on account of, one, the trade war, and also the tightening liquidity, particularly by the US Fed, which would be followed by most of the other central banks. So the statement of Powell came as a positive surprise to people, because so far the belief has been that the US Fed is on course to do the 4th rate hike this year in December, and then another 3 or 4 next year. But then, of course, there have been few dovish comments from the US Fed. We need to keep in mind that this has been the longest expansion in US history, starting from 2009 to 18 now. There's not been a single quarter of recession. It's been a huge expansion, and at some point in time, the economy is likely to show some moderation in growth, and there are few signs. If you read the commentary of companies like General Motors or Caterpillar, if you look at some of the recent data, they're clearly indicating towards some moderation in the growth momentum in US. US has been hugely ahead in business cycle, in monetary policy cycle, and of course they have been leading not only the developed world but the global economy. I think there are signs that growth is moderating.
Okay. So what we saw in the last 12 months was that, on expectation that the tightening is actually seeing the US tighten its rates, we saw a lot of global money start positioning back to US, and emerging market as a pack underperformed. Do you see a reversal of that, a possibility of that, now that the things have changed, or the stance from Mr. Powell? Do you see a case building for that?
I think so. So as I said, the US has been hugely ahead in the business cycle, in the policy cycle. And I think over the last 10 years, US has substantially outperformed. So developed markets have outperformed. Within that, US has outperformed the most. Of course, it has been a narrow rally there also. It's the FANGs and some of the other stocks. I think over the next few years, there is a likelihood that emerging markets outperform developed markets. Having underperformed so much, the valuation gap has increased substantially. The economic growth has been higher in emerging markets versus the developed markets, but of course the profit growth has not been as high. Maybe, and we have seen some positive developments from a political perspective. So what's happening in South Africa, what has happened in Turkey, what has happened in Brazil, and of course we'll have elections in India. And I think you'll start from a different slate from here on. The first few weeks or few months when US tightens and US market goes down, they take everybody along with them. So there is a risk of move. But after that, I think there is going to be a shift from developed markets to emerging markets. There is a decent possibility of that.
Okay. The other big factor I would like your opinion on is the quality of earnings in India. This time too, perhaps according to some money managers, the quality of earnings perhaps are not in line with estimates, but were not bad either. And now for FY20, the expectations are again built up for 20% plus, led by 10 companies in the index, for example. What is your view on how earnings could pan out 4 quarters far out, and also the health in the earnings quality in your view of the broader market?
So last 5 years, I mean, that's been the disappointing part, where at the beginning of the year everybody starts with an expectation of 20 years, and as you go through the year, I mean, they keep getting downgraded, and then you moderate your expectations, and at the end of the year you come close to the 0 or low single digit. Last 2 quarters, I think on a favorable base of last year with GST, demand impact, etc., I think the expectations started getting built up again. But then I think, as you rightly said, that it's not widely dispersed. I think it's still quite, I would say, on the earnings side, I think it's we are yet to see a full-fledged recovery in the earnings. Maybe I think we'll have to wait for a few more quarters, but of course we have bottomed. Yeah, we have surely bottomed.
You also spoke about in your panel discussion that biggest standout factors for Indian markets is the way domestic investors, irrespective of market levels and volatility, committing money, their savings into this market, $1 billion plus. Do you think that this is sustainable, or is it equivalent to the US markets where 401k happened and for 15-20 years sustained flow came? You've done some work also on it earlier.
So yeah, I used to talk about a few years ago that I think a variety of factors, RBI moving towards inflation targeting, I think keeping real rates high, I think the demographic dividend and variety of other factors, the awareness that has got created. You guys have played a very big role in creating that awareness, other than the MP Sahi Hai movement, a recency bias where over the last few years markets have done well. I think we are seeing a maturity among the domestic investors where they are looking at longer term, they are looking at systematic and disciplined investing into equities. Equities is emerging as the favored asset class, and also I think it's been the not so good experience with some of the other asset classes, and people are finding it how tough it has been to sell real estate and the investments in gold. So I think it's a sustained trend. Having said that, whether it's going to be a straight line, not necessarily. There would be periods of high volatility where it will get a little tested, but structurally, if you ask me, I think we have a long way to go as far as financialization of savings is concerned.
Navneet, this Indian market rally or the bullish phase started from 2013 when Mr. Modi was called out as the prime ministerial candidate for BJP. Until 2017, we saw a humongous rally. Mid caps, small caps became 10-20% premium to the large caps. This year we saw that adjusted, and again 10-15% discount to the large caps have happened. That adjustment, do you think, is enough? How do you see next 3 to 5 year picture if one were to go about doing asset allocation in this light of correction?
So I think we have seen decent correction in mid and small cap space. I think the opportunities for bottom up stock picking has gone up with the correction that we have seen since the beginning of 2018. And I think, as I always keep saying, I think India is a stock picker's paradise, and if you are a good stock picker, there are opportunities across market capitalization. And I think for 3 or 4 years, starting from the 2013, our view was that mid and small caps would outperform large caps. But at the beginning of this year, there were clearly signs of froth building in the mid and small cap space. I think to a great extent that froth has got cleared.
That, of course, is Navneet Munot right here on ET Now, speaking with my colleague Ajay Sharma, talking about trade wars, tightening in liquidity, EMs versus DMs, and, of course, politics, which could perhaps create some volatility in the short term.